Good evening, students, and once again, a very welcome to all of you. And today we are going to discuss the second class and the second session on India's 38 intangible asset. In the last class, students, we have discussed the meaning of intangible asset, and we discussed the meaning of assets as well. And that day, we have again understood that asset is a resource which is controlled by the entity arising out of past event and which has an element of future economic benefit, right? Then we understood the definition of intangible asset into three parts. Number one, intangible asset. Intangible asset is a non-monetary asset without having physical substance. Intangible asset is an identifiable non-monetary asset without having a physical substance. So three legs we have discussed that day: identifiability, non-monetary asset without physical substance. So the first part we discussed that intangible asset is something which does not have a physical substance. Like computer and laptop have a physical substance, but a software does not have a physical substance. Formula, copyright, patent, trademark, these things does not have a physical substance. Intellectual property right, these things does not have a physical substance. Goodwill, this does not have a physical substance. So intangible asset has some intangible benefit, inherent benefits, right? Which is not a tangible thing, which cannot be touched, which cannot be seen. So intangible asset is something which cannot be seen, right? So intangible asset does not have a physical substance. If there is a software which is into the CD drive or which is into pen drive, so that pen drive has a physical substance which is an insignificant value, but the software is intangible. It does not have a physical substance, right? There is a 50,000 crores of a spectrum license and government is just giving you a piece of paper. That piece of paper is not an intangible asset. That license is an intangible asset which gives the right to operate in future. Okay. Again, if I talk about robot, Alexa, if you will say that Alexa, please play Om Namah Shivaya, Alexa will start playing Om Namah Shivaya. You will say, Alexa, please play songs. Alexa started playing songs. You will ask Alexa, what's the weather outside? Alexa will say that the weather is pleasant and it is 21 degrees Celsius, this, that, right? So the knowledge embodied in Alexa, that piece of instrument, Alexa, is not a physical substance. Or I would say that piece of element is a physical substance, but it is not a significant portion. The significant portion is the knowledge embodied in the Alexa, right? And hence it is an intangible asset. Robot, it is kind of an intangible asset where the artificial intelligence, where the robotics, that has a significant value in comparison to the outer body which is there. So friends, in case of a intangible asset, it does not have a physical substance, and where it is a mix of physical versus non-physical substance, in that case you have to understand which is more significant, right? And what is the relevant purpose of that entire thing, whether knowledge is more important or that skeleton or structure is more important, whether pen drive is important or your software is important, right? So probably those pen drives or those robotic structure has been used only for the purpose of basically storing the knowledge, storing that artificial intelligence. Okay. Then we discussed about non-monetary asset, and we discussed non-monetary asset are those assets which are not monetary asset. And what is meant by monetary asset? Monetary asset are those assets which are going to be realized, in the fixed unit of cash, which are going to be realized in the fixed amount of cash, right? When I'm saying fixed amount of cash means, for example, if you have given a loan to someone, right? You will say that I have to receive 5 lakh rupees from that guy. For example, if you have sold goods on a credit basis, you will say that I have to receive 2 lakh rupees from that customer. But if there is an inventory which is lying in your godown, you cannot say that I have to receive 5 lakh rupees from Viraj. You cannot say that I have to receive 3 lakh rupees from Tanisha. You cannot say that, right? Why? Because you have not entered into the sale contract. You have not entered into the sale contract, right? This is how it is. Right, friends? So non-monetary asset, we discussed an example of non-monetary asset could be the property, plant and equipment. It could be your intangible asset. Okay. It could be your investment property. So these are the examples of non-monetary asset. We understood physical substance, non-monetary asset. Then there is a third leg which is known as identifiability. What is meant by identifiable? Identifiable means either separable or the word is not and, or it is arising from the contractual right. For example, if something which is not separable, then you need to ask another question from the management. Is it arising from the contractual right? We understand that you have spent around 2 crore rupees on the SAP, right? On the SAP. But whether this SAP is arising out of a contract, answer is yes. This company has entered into a contract with Infosys or Oracle, and they are developing this SAP or ERP for the company, and hence it is arising out of the contractual rights. So hence it will be an intangible asset. Okay. Or government has given a non-transferable license. Although the license is non-transferable, but it is arising out of the contractual rights. Okay. And hence it is an intangible asset. What is meant by separable? A separable means if that intangible asset is able to get separated from the entity. Get separated from the entity means, for example, I am Alok Garg. Okay. So my name is Alok Garg and people know me by my name, right? Because I'm teaching Ind AS, I'm writing books on Ind AS, I'm taking lectures on Ind AS. So people know me by my name. So can I separate my name from myself? Let's say if tomorrow I'll say that Mr. Viraj, your name will be Alok Garg and give me 50 lakh rupees, right? Can I sell my name to somebody else? Answer is no. I cannot sell my name to somebody else, right? But for example, if I have a, let's say, license and I can sell that license to someone else for an amount of consideration. Okay. So identifiable means separable or arising from legal or contractual rights. So this is what we have discussed that day, right? This part we have covered. And friends, we have discussed that for making any intangible resource as an intangible asset, three conditions are mandatory. What are those three conditions? Number one, of course, the identifiability should be there. Second, control should be there. Control means in intangible asset, because you cannot touch, you cannot see, right? You have the patent, you have the copyright, you have the trademark. Just ask the question with yourself that why I am getting some product registered, why I am getting my logo registered, right? So that the others will not copy or others will not use your logo. They will not use your content, right? So control means having a future economic benefit, okay, or stopping others from accessing the future economic benefit, okay. So this is what is the meaning of control. The third one is, of course, future economic benefit. Future economic benefit may arise out of earning the revenue, or it may arise when you are controlling your cost as well. Even if the cost is declining, again, it is an example of future economic benefit. In the control example, the classic example is, can the training cost given to the employees can be capitalized? Answer is, whether future economic benefit is there, answer is yes. Can you identify the training cost? Answer is yes. But the control part is missing. When you are giving a training to an employee, of course, the knowledge and skill of the employee will enhance. But when the knowledge and skill of the employee will enhance, but that employee can join another company as well, and the others will use the benefits from this employee for the knowledge which this employee has gathered from the past employment, right? So this is what is there as far as intangible asset is concerned. So we discussed these three legs as well. Then we discuss the recognition criteria. And in the recognition criteria, we discussed that there are three aspects of intangible asset. Of course, for any asset, future economic benefit is probable and cost can be measured reliably. It will always be there. But the third aspect is that asset should meet the definition of an intangible asset. Means it should be identifiable, it should be non-monetary, it should be without physical substance. Your PP is also identifiable, your PP is also non-monetary. Then what distinguishes the PP from intangible asset. In intangible asset, the definition ends with without physical substance. In PP, the definition starts with tangible assets. Okay. This is how the difference is there. If I talk about measurement at initial recognition, it has to be measured at cost. But there are some situations where the cost is not the only criteria for measurement. There are fair values also. There are other values also. So we'll discuss that part also. Coming to the mode of acquisition, there are 6 kind of mode of acquisition. One could be the separate acquisition, when you go to the market, enter into a contract and get the intangible asset. So in case of a separate acquisition, intangible asset has to be measured at cost. Cost includes your purchase price plus import duties, if any, plus non-refundable taxes, the taxes for which you cannot take the credit. Okay, if you are paying a GST and you can take the input credit, it is not your cost, right? It is just a pass through. So after deducting trade discount and rebates plus directly attributable cost of preparing the asset for its use, it could be your professional fee, it could be employee benefits, it could be consultation fee, it could be legal fee, it could be registration fee, right? These are the directly attributable costs. Friends, the dismantling cost is not there as like PPE, because in PPE the physical substance is there, and hence if there is a physical substance, it may includes, if there is a physical substance, it may require the site restoration, it may require the dismantling. Okay. Now let's discuss what happens if PPE is acquired by way of a business combination. When we discussed, if PP is acquired by way of a business combination, in that case, what we will do, whatever intangible asset we are getting, whatever intangible assets we are getting, those intangible asset has to be measured at fair value. Those intangible asset has to be measured at fair value. Right? Cost equals to fair value at the acquisition date. And those intangible asset are in addition to goodwill. Okay. Friends, in my cost part, we have also discussed that in case of a deferred payment credit, when the company is paying the payment, the consideration in after some delay. Okay, so there is a time lag between acquisition of intangible asset and payment of consideration. In that case, standard says that if the payment is on the deferred terms, if payment is deferred beyond normal credit terms, the cost is the cash price equivalent at the recognition date. Means if I would have paid during the normal credit term, for example, Oracle is giving a 30 days credit term to everyone. So what is the normal credit term? 30 days. So, and Oracle is charging 2 crore rupees. So 2 crore rupees is my cash price consideration, cash price equivalent. But the company XYZ Limited told Oracle that I will pay you only after 1 year. So now Oracle is charging 2 crore and 20 lakh rupees. So the difference between the cash price equivalent, which is 2 lakh rupees, and the actual consideration, which is 2 crore 20 lakh rupees, the difference is 20 lakh rupees. That has to be treated as an interest expense in your profit and loss account. That has to be treated as an interest expense in your profit and loss account. Okay. So this has to go to the P&L. Sir, we have also read Ind AS 23 borrowing cost. Can it be capitalized? Answer is yes. If that asset is a qualifying asset, then this can be capitalized as per Ind AS 23, not as per Ind AS 38. Okay. So we discussed that thing, and then we discussed if intangible asset has acquired by way of a government grant, and we discussed in that case, either you can recognize your intangible asset as well as government grant at fair value, or you can recognize your intangible asset at nominal value, say 100 rupees, say 50 rupees, say 1 rupee, whatever you feel good. Okay. Plus, if you have paid anything to acquire that intangible asset, for example, you have paid only registration charges. So nominal value plus any expenditure which you have paid to acquire that intangible asset. Sir, what is the fourth or fifth? So we talked about separate acquisition, we talked about business combination, we talked about government grant. Then there is an exchange of assets. Friends, if you are exchanging your asset in lieu of getting an intangible asset, then the value of the acquired intangible asset is equal to the fair value of the asset given up. Okay. Sir, what happens if the fair value of the asset given up cannot be measured reliably? In that case, you can go with the fair value of asset acquired if it is more reliable. Sir, what happens if neither fair value of the asset given up nor the fair value of the asset acquired both is there? What happens in that case? In that case, you have to measure the fair value of the asset. You have to measure the value of the intangible asset acquired is equal to WDV of the asset given up, the carrying value of the asset given up, right? So whatever is the book value of the asset which you are surrendering, that will become the value of the asset acquired, right? So these are the three scenarios which we have discussed. Then we have discussed about internally generated goodwill. So internally generated goodwill is not allowed to be capitalized. Okay, it is prohibited in this standard. Then we talked about internally generated intangible assets, right? That was the last part of the yesterday class. Students, do you have any doubt so far? Do you have any doubt so far? Any doubt? Please do let me know if you have any doubt. If you need any clarification. Viraj, Selesh, Mufita, Vanshika, Tanisha, Rahul, Dima. Okay, you are good. Okay. So now let's discuss the last part which we have discussed in the yesterday class. We discussed about internally generated intangible asset. For example, nuclear power companies, for example, pharma companies, right? So they are doing a lot of research for acquiring the formula, right? They are doing a lot of inventions. So friends, in case of internally generated intangible asset, internally generated intangible asset it has to be split it into two parts. One is research phase and one is development phase. One is research phase and one is development phase. When I talk about research phase means a phase where the knowledge is acquired, where you are acquiring your knowledge. Development phase is that phase where you are clear that I have acquired the knowledge. Now I have to apply the knowledge, right? So this is known as a development phase. Friends, whatever expense which have been incurred in the research phase, it has to be charged to the P&L. Whatever expense which is recognized in development phase, it has to be capitalized. Okay. Sir, how do we able to know that the development phase is started? So development phase will start, or the development cost will be capitalized if the entity is able to demonstrate six conditions. What are those six conditions? So I have told you the pirate, Pirate, pirate. What is meaning of pirate? P means the probability of future economic benefit should be there, right? I means intention to use or complete the asset should be there, right? R means the resources should be adequate to complete the project, right? A means ability to use or sell should be there. Okay. T means the technical feasibility should be there. And the last E means the expenditure can be measured reliably. Okay. If these six conditions are satisfied, then you can say that the development phase has been started and now we need to capitalize the cost. Sir, since it is a very subjective thing, so let's say if the company has charged any expense as a research phase expense, but it was a development phase. So now in this year, the company has realized that they have done the wrong thing in the past, right? So can I capitalize? So can I correct that thing which has been happened in the last year? Answer is no. If you have already charged something into your P&L, in that case, you cannot capitalize it again, right? You cannot correct it. Sir, if the company is not able to clear whether it is a research phase or development phase, in that case, you have to treat the expenditure as a research phase expense and you have to expense of in the P&L. In the examination, if question says that it is not clear whether it is a research phase or development phase, the question has given you so many, cost, so many things. And in the question, it is written that the management is not able to identify whether the development phase started or not. In that case, if this is written in the question, then you have to charge entire cost in the P&L, and you have to write in the answer that according to Ind AS 38, if it is not able to split it, or if it is not able to distinguish between the research phase and development phase, then the entire expense has to be treated as like a research phase, and it has to be debited to the P&L account. And hence the date, that is from this date to this date, these are all expenditure which have been incurred, and it has to go to the P&L during the period of incurrence, right? So you have to write your answer accordingly. Friends, now I am starting today's or new agenda, I would say, new agenda. So this detailed case study we have done in the last class. So now I want to discuss the subsequent measurement. And one thing I want to tell you, if you guys have already attended PPE, property, plant and equipment session, right? In that case, this will be your pure revision, right? This will be your pure revision, because the 90%, or I would say 95% concept is cut, copy, paste. So let's discuss the subsequent model, the subsequent measurement, which is after recognition, after initial recognition. What is the subsequent measurement? Friends, the subsequent measurement means the company can choose. What are those two models? Are you aware about the two models on subsequent measurement? Have you heard about that? Have you heard about the two models, guys? Can you tell me quickly what are the two models in PPE I have discussed with all of you? Two models after recognition. Initial recognition means recognition at the transaction date. Right, Rahul? Rahul is asking, sir, what is meant by initial recognition and subsequent recognition? Initial recognition means recognition at the transaction date. Subsequent recognition means once the asset is already recognized in the balance sheet, then subsequently whatever you will do, that is more of a subsequent measurement. And subsequent measurement pertains to your reporting date generally. Anisha and Mufita is saying, yes, sir, it is cost and revaluation model. Yes, two models we have read, cost model and revaluation model. Friends, in our accounting standard for intangible asset, for intangible asset, this revaluation model was not there. In accounting standard, friends, I'm talking about accounting standard 26, right? When you read this accounting standard 26 in CA Inter, in that case, this model was not there. This revaluation model was not there. It was there for PP, but for intangible asset, it was not there. So if I need to differentiate between AS 26 and Ind AS 38, Ind AS 38 allows revaluation model also in case of intangible asset, right? Provided the revaluation model can only be allowed if there is active market for those assets. If there is an active market for those assets. For example, if I have got the copyright of my content, there is no active market for selling that copyrights. For example, I have just invented some formula, right? Or for example, I have just, invented some formula, invented some technique, but there is no active market for that, right? If there is no active market, in that case, probably you will not be able to identify the fair value. In that case, you can continue with the cost model, okay? In that case, you can continue with the cost model. Is that clear? Is that clear? So if the valuation can be done, then you can revalue, otherwise you cannot. Okay. So friends, cost model and revaluation model. Again, I would like to reiterate the same concept which I have discussed in PP, property, plant and equipment. And please let me know if my Excel file is visible. Again, I'll discuss the same concept which I have discussed for the PPE. Okay. So friends, subsequent measurement, right? Let's discuss about the subsequent measurement. So we discussed two aspects of subsequent measurement, cost model and revaluation model. Cost model and revaluation model. We discussed that intangible asset can be measured using, subsequently measured can be using cost model or revaluation model. Whatever model the company will apply, it should apply consistently to that class of asset. You remember what is meant by class of asset? Can anyone tell me what is the meaning of class of asset? We have discussed this class of asset in detail in property, plant and equipment standard in day 16. Can anyone tell me what is the meaning of class of asset? Class of asset, you are right, Ridhima. Class of asset means the asset which is having a similar use, which is having a similar nature and similar use in an entity's operation, right? And you remember I have taken an example of office building and factory building. So although both are building, but the use of the office building is for administrative purposes and use of the factory building is for the production purposes. So the use is not similar. Probably the nature is similar. All are building. Office building is a building and factory building is a building. It is a same, let's say, two-story building. It is constructed by the same contractor. So everything is same. The cost was same, and the building is just adjacent to each other. The building is into the same location. Everything is same. But what is the difference? One is used for corporate office. One is used for administrative purposes. Other one is used for the production purposes. Right? So hence, office building and factory building are the two different class of asset. Okay. So what is meant by class of asset? Class of asset means the assets which are having a similar nature and similar use in an entity's operation, right? What is meant by class of asset? A grouping of assets of a similar nature and use in an entity's operations. Okay? For example, trademark, for example, software. These are examples of class of assets. Okay? Is that clear, friends? So whatever model you will use, it has to be as per the class of asset. You have to consistently apply the right? Whatever model the company will apply, it should apply consistently to that class of asset. And class of asset means grouping of similar asset having same nature and use in an entity's operations. I hope it is clear to all of you, friends. Is that clear? This is the same repetition, same thing which I'm telling you. Okay. What could be the example of class of asset? What could be the example? Software. Can you quickly tell me some example of class of assets? Examples of class of assets. Examples. Software, patent, copyright, trademark, formula, goodwill, intellectual property rights. What could be else? Technical know-how. Technical know-how. Right? It's like a formula. Then licenses, one of the major intangible asset. In case of telecom companies, the biggest cost is a license cost, spectrum license, right? Licenses, then technical know-how, licenses. Then what else? Mining rights for the mining industries like Adani, Reliance, mining rights. Okay. So these are the examples of intangible assets. These are the examples of intangible assets. Is that clear, friends? Is that clear? So let's say now I'm asking one question. The company has three kind of patents, or the company has, let's say, three kind of software. Software A, B, and C. A, B, and C. Company wants to apply revaluation model for this software A, and the company wants to apply the cost model for this software B and software C. Because the value of software A, market value of software A is much more than the market value of software B and C, and hence company wants to apply the revaluation model for software A, but does not want to apply the revaluation model for software B and C. Tell me whether company can do this? Whether company can do this? Is it allowed? Is it allowed? Yes, carbon emission license is also an intangible asset. Friends, is it allowed? You guys are right. It is not allowed, right? It is not allowed. So the company has to apply a same model for one class of asset. In this case, the company can either apply cost model for all three software, or the company can apply revaluation model for all three softwares. Friends, the company has three software and company is applying consistently. So let me again write here. The company is applying consistently. So let's say this is situation A. Is A. Right? So answer is not allowed. Answer. Not correct. Company has to apply, need to apply same model for all three software. Right? All three software. Now let me give you the case C. Now you need to tell me the right answer for this. The company is applying revaluation model for all three assets, right? The company wants to apply. The company is applying the revaluation model for software A and software B. But for software C, the active market is not there, and company is not able to determine the fair value. The active market is not there and the company is not able to determine the fair value. Active market is not there and the company is not able to determine the fair value. Friends, what will be your answer? Whether it is allowed or it is not allowed? Whether it is allowed or it is not allowed? What will be your answer? So Viraj, it is not exchange of asset. There is no concept of book value. Okay. It is not exchange of assets. So I am asking at the reporting date, whether company can apply the cost model, means the company can apply the original cost minus depreciation minus impairment, so that original cost will be carried after amortization and impairment. In revaluation, you do the fair value. There will be a new value which is substituted on the reporting date. Is it allowed? Yes, it is allowed. It is allowed. So Tanisha, the company can approach the valuer, right? I'm not saying the company is not doing that. I am saying even the valuer is not able to determine the fair value. Let's say in that case, what happens? In that case, what happens? Because this is an intangible asset. And due to the uniqueness of that intangible asset, probably even the valuer is not able to identify the fair value. Right? In that case, what you will do? In your examination, this kind of situation is given. This question came in your examination. Now you need to answer. And this is the limited facts which is given to you. In that case, what is the right thing? Yes, it is correct. It's correct. Right. You have to write, company has to apply the same model for all the assets in a single class, However, if any asset of however, if any asset of that, however, if any assets fair value cannot be determined, in that case, that asset can be carried at cost model, right? You have to write in this way. You have to write your answer in this way. Is that clear? Is that clear, friends? Right? Okay. Now, again, I'm discussing. So we discussed the cost model and revaluation model. And so far, we all have understood cost model means you have to carry your intangible asset at cost, right? Evaluation model means you have to you have to subsequently measure your asset at fair value. Subsequently measure your asset at fair value. Let's discuss again the cost model and the revaluation model like we have discussed in PPE standard. And it is just copy paste. Okay? It is just copy paste. So let me bifurcate here by putting a line. Okay. This is my cost model and this is my revaluation model. Intangible asset going by the cost model has to be carried at cost. Intangible asset has to be carried at cost. In revaluation model, intangible asset has to be carried at fair value. Intangible asset has to be measured at fair value if active market exists. Right? Has to be measured at fair value if active market exists. Okay. Now, sir, if cost model is used, then what is meant by cost model? It means that how you compute your carrying value in the balance sheet. How you compute your carrying value in the balance sheet on the date of balance sheet on the reporting date. Simple, sir, we are aware that carrying amount is calculated, which is cost minus accumulated amortization minus accumulated impairment losses. Right? Carrying amount is equal to cost minus accumulated amortization minus accumulated impairment losses. Okay? This is how you compute your carrying value. Okay? This is how you compute your carrying value. Is that right? For example, A Limited has purchased a software for rupees 1 lakh. The life of software is assumed to be 4 years. Calculate carrying value at the end of every year. Okay. So first of all, what is my cost? My cost is 1 lakh rupees less less sorry amortization right. For the first year, what is my amortization value? 1 lakh divided by 4. Okay. Then it will give me how much? It will give me carrying value, right? CV, carrying value at the end of year 1, right? Let's write the remaining life here. Remaining life. Okay. So at this point, my remaining life is 3 years. The remaining life is 3 years at this point of time. Now again, I'll amortize it in the second year. Again, my remaining life will be this divided by this. Okay. What is my carrying value at the end of year 2? It is again this plus this. My remaining life is 2 years less amortization in the year 3. Okay. Then my carrying value at the end of year 3 is how much? This plus this. Remaining life is 1. Again, amortization. My carrying value at the end of year 4. Okay. This is how it will be there. This is the remaining life. And this is your how this depreciation is going to be, how this amortization is going to be calculated, right? So for every year, let's say if you, I will ask you, what is your carrying value at the end of year two? It is 50,000. Your cost is 1 lakh minus accumulated depreciation is 50,000. So let's say the cost is fixed, which is 1 lakh. If someone will ask you what is your accumulated amortization, in that case, your accumulated amortization is how much? It is 25,000 in the first year. It is 50,000 in the end of the second year. It is to 75,000 in the end of third year on the reporting date. And it is 1 lakh at the end of fourth year. Right? And your cost will always be 1 lakh. Right? So cost minus accumulated amortization is equal to your carrying value. If there is any impairment loss, that impairment loss is also going to be deducted. Right? Simple. Any question here, friends? Any question here? Any doubt? Any question? Very good. And I will again strictly advise you that once complete your PPE, then only take up your intangible asset. And whenever you read intangible asset, read with the intention of the revision, right? Just understand what is the difference between these concepts in PPE versus intangible asset, right? And then read like a revision so that your two standard will get prepared. One is your PP, another one is your intangible asset, right? And you will be able to understand the difference also. Okay. Now let's talk about the revaluation model. And now you need to tell me what is the carrying amount definition or formula in case of a revaluation model. You need to tell me how this carrying amount needs to be computed. You know, carrying amount is equal to revalued amount. I have told you revalued amount, right? Minus subsequent amortization minus subsequent impairment losses. I told you, no, subsequent amortization minus subsequent impairment losses, right? I told you that. So what is meant by subsequent? Subsequent means once you done the revaluation, once you have obtained the fair value, right? And after, so on this fair value, the prospective depreciation, prospective amortization will be there. Let's say in the year two, you have done the fair valuation, right? So that fair value will become the new value. In the next year, you have not done the fair valuation. Why, sir? Because standard permits you. Standard says that if there is no volatility, in that case, it is allowed that you can continue with the last year values. Last year values means on that fair value you can continue. If there is a major volatility, then you have to do the fair valuation every year. But if there is no major volatility, then it is okay if you will do the fair valuation on a frequency of 3 to 5 years. It is okay, right? So let me again give you an example here. A Limited has purchased a software for rupees 1 lakh. Life is assumed to be 4 years. Okay. And some more information is given here. More information is given here. What information is given? Let's say the company has revalued the software at the end of second year. Fair value comes out to rupees let's say 1.10 lakhs. Calculate carrying value at the end of every year. This is what it is given. Now let me put this thing here. So in the first year, life will become as it is. In the first year, the life will be the same. Cost will be 1 lakh. Cost will be 1 lakh. Okay. Amortization is 25,000. Carrying value at the end of year 1 is 75,000. Remaining life is 3 years. Accumulated amortization is 25,000. Less. Yes. Again, amortization. Again, this value comes out at 75 divided by 3. Right. And now, what is your carrying value? What is your carrying value? Carrying value at the end of year 2 is how much? Carrying value at the end of year 2 is 50,000. It's 50,000. So in this case, what is your revalue? What is your fair value? What is your fair value? Your fair value at the end of year 2, fair value at the end of year 2 will be how much? It will be 1,10,000. It will be 1,10,000. So there is a revaluation surplus. There is a revaluation surplus of how much? Revaluation surplus of how much? 60,000. There is a revaluation surplus of 60,000. 110 minus 50,000. This is the revaluation surplus. Now, what is your revised carrying value? What is your revised carrying value at the end of year 2? The revised carrying value at the end of year 2 is your how much? 1,10,000. Now, this will be your new cost. This will be the new cost, right? This will be the new cost, na? So now there is this accumulated depreciation has to be reversed because this is a new cost. This is the depreciated cost. This is the new book value. This is the new cost. All agree with me, na? Let's say if I bought a car for rupees 10 lakh and the life is 10 years, at the end of the second year, technically my cost of the car should be or my market value of the car should be 8 lakh rupees technically, right? Now what happens? This 8 lakh rupees. Now what happens? Due to XYZ reason, because of this engine which is not available, or let's say because of some part which is not available, in that case, the value of this car has gone up in the market. Now the value is 9 lakh rupees, right? So if the market value is 9 lakh rupee and my depreciated value is 8 lakh rupees, so of course, 9 lakh rupees should be the cost. I need to depreciate as per 9 lakh rupees in the remaining life. The remaining life will not change, but now my value has changed, right? If I'm opting for a revaluation model. So my revised carrying value at the end of year 2 is 1,10,000. And now my amortization will be how much? So amortization will be how much? It is 1,10,000. 1,10,000 divided by 2. My remaining life is 2 years. Remaining life is 2 years. Right? Is that clear? Remaining life मेरी end of the year 2 के बाद मेरी remaining life यहाँ पर कितनी बचेगी? 2 years बचेगी ना? Right? And this will be my carrying value at the end of year. This will be my carrying value at the end of year 3. Okay. Again, there's an amortization. Here the remaining life will comes out at 1 year. Right? Again, there is an amortization. And carrying value at the end of year 4 will become 0. This will become 0. So since it become a new cost, so here your accumulated depreciation at the end of year 3, your accumulated depreciation is how much? It will be 55,000. At the end of year 4, the accumulated depreciation is sorry, this will be 55,000 plus 55,000, 1,10,000. This will be your accumulated depreciation. Right? Is it clear? Is that clear, friends? Do let me know if you have any question. Friends, do let me know if you have any questions. It's a good chance. Again, revise revaluation model. Let me know if you have any question. Okay, everything is clear. Clear in mind or clear from mind? Clear in mind? So let me again take you to the PPT. We discussed that in case of subsequent measurement, either cost model or revaluation model is used, right? And this accounting policy of cost model and revaluation model should be applied to the whole of a class of intangible asset and not merely to individual asset within a class. If the individual asset within a class fair value cannot be determined, in that case, it is allowed to keep it at the cost model for that particular asset. Otherwise, you need to revalue all the assets in that same class. If you are actually revaluing that, right? In that case, you have to revalue all the asset in the same class. Okay. Is that right, friends? Is that right? So the company can choose either cost model or revaluation model as its accounting policy. In cost model, your carrying value is calculated by original cost minus accumulated amortization minus accumulated impairment losses, right? Same what we have discussed in standard as well. After initial recognition, intangible asset has to be carried at revalued amount. What is meant by revalued amount? It is the fair value at the revaluation date. What is your carrying value in that case? Your revalued amount on the date of revaluation minus subsequent accumulated amortization minus subsequent accumulated impairment losses. For revaluations under Ind AS 38, fair value shall be determined by reference to an active market, right? If a single item of intangible asset is revalued, then the entire class of intangible asset to which that item belongs has to be revalued. Class of asset means a grouping of asset of a similar nature and use in an entity's operations. Sir, if we have used the revaluation model, whether the company is required to do the revaluation every year, valuation need not to be performed every year or every reporting period, right? It has to be at sufficient regularity so that the carrying amount does not differ materially from the fair value. Right? Where movement in fair values are volatile and significant, in that case only frequent revaluation. Otherwise, 3 to 5 year is more than sufficient to do a revaluation. In a block of 3 to 5 year, it is good if the company will do the revaluation. So this is on the frequency of the revaluation. Right? Is that clear? Is that clear? I hope it is clear to all of you. Abdul is asking, sir, what happens with the accumulated depreciation till second year? So, Abdul, the accounting entry is, let's say, in that case, what happens at the end of the second year, the carrying value is 50,000, right? The carrying value is 50,000 and your new value is 1,10,000, right? In the new value is 1,10,000. So in that case, what you need to do, you need to debit your full value. You need to debit your asset with full value. Let's say the full value is, for example, 1,10,000, right? You need to credit your basically your net carrying value, So your net carrying value is, so let me explain with the help of Excel here so that you guys will be clear. At the end of second year, there will be two balances, right? There will be two balances in the company. One, gross block of this asset, gross block of asset. Gross block always remains same, remain 1 lakh only, right? And then there is a accumulated depreciation, right? Which is your 50,000. Okay? Which is your 50,000. So your net block is how much? Your net block is how much? 1 lakh minus 50,000, 50,000. Okay. So every year, there's a depreciation, and that's how this accumulated depreciation comes out. So what I'll do, this gross block is there. Okay? This gross block is there. And this accumulated depreciation is there. Both are the two different side of it. Accumulated depreciation is kind of a liability side, and your gross block is kind of a asset side. What is your net value? Now you have to just remove the balances. Now you have to remove the balances. So let's say if you need to remove the balances, for example, you need to do two gross block of asset. Two gross block of asset. By how much? Credit. Credit. I'm just giving a scenario. Two gross block of asset credit. Because you have to eliminate this gross block. You have to just cancel this gross block. Now you need to cancel the accumulated depreciation also on this asset. Accumulated depreciation debit, because this has a debit, this has a liability. It's a debit balance. It is 50,000. Right? So you are canceling your old asset. You are canceling all your balances. But you are getting, and as you are getting this asset with a new value. So let me write here intangible asset. Asset at fair value, which you have to debit. What is the fair value of the intangible asset in this case? I took 1,10,000, right? So what is the total of the debit side? The total of the debit side is 1,60,000. The total of credit side is only 1 lakh. So where the next will go? To revaluation surplus. Right? 60,000. So this is how this thing will happen. Are you clear now? Or simple, I can say that accumulated depreciation debit to gross block, right? So the net gross block will remain at 50,000 rupees. Now the value is 1,10,000 rupees. 60,000 rupees will go to the revaluation surplus. This is how this accounting needs to happen. Abdul, have you understood now? Clear? Vanshika, have you understood regarding this accumulated depreciation part? So Vanshika, what happens in the first 2 years, the accumulated depreciation were how much? It was 25,000 and it become 50,000. It become 50,000, right? So this 50,000 will be cancelled. Why cancelled? This 50,000 will be credited to your fixed asset. So that is why this value is 50,000 ना. कि आपकी वैल्यू 1,50,000 क्यों हुई? क्योंकि आप उसमें डेप्रिसिएशन चार्ज करते हुए चले गए. तो आप अपनी बुक्स में कैसे दिखाते हो? आपकी बुक्स में 1,00,000 रुपए पे फिक्स एसेट का ग्रॉस ब्लॉक आता है और 50,000 रुपीज पे एक्यूमुलेटेड डेप्रिसिएशन आता है. बुक्स में आप नेट ब्लॉक दिखाते हो, राइट? बुक्स में आप नेट ब्लॉक दिखाते हो. सो देर आर टू ऑप्शंस. वन, you have to keep your gross block at cost, which is day one amount, and you need to just credit depreciation to accumulated depreciation as a second line item, right? Second, अगर आप accumulated depreciation में ट्रांसफर नहीं करते तो क्या करते? Depreciation account debit to fixed asset account, sorry, intangible asset account in this case. So वैसे भी आपका intangible asset कम होता हुआ जाता. So when you are looking at a net block, you have to look your gross block minus accumulated depreciation or minus accumulated amortization. Right, Vanshika? Is that clear? Vanshika, is that clear? Or still it is not clear? It is just 11th or 12th class concept. What is the accounting entry for depreciation or amortization? Depreciation or amortization account debit to accumulated depreciation or amortization. You have just created a second GL, second ledger, right? Second item. Or in class 11th, when we studied in class 11, the accounting entry was depreciation or amortization account debit to asset account. So directly the asset is getting reduced. Normally, in accounting standard Ind AS in corporate life, the asset is not getting reduced directly. There is a reserve which is created against the asset. There is a reserve in the name of accumulated depreciation or accumulated amortization. But whenever you will show the PP or intangible asset on the face of the balance sheet, it will always be netted amount. It will always be net book value. It is always be the carrying value, right? And in the notes, you will have a gross block, which is the original cost. You will have a accumulated depreciation or amortization. But when this fair value will happen, so this fair value will replace all your past numbers. And that is why the net block is 50,000 and the revised fair value is 1,10,000. That is why this 60,000 is going to the revaluation surplus. Right? I hope it is clear now. Very good. This is what I have told you to just make you guys understood this concept, right? So let's move further. In PP, we have discussed, sir, revaluation surplus, understood this revaluation surplus part, right? Now, in case of revaluation surplus, what is the accounting treatment of this revaluation gain or losses? If for example, you are opting for a revaluation model, there could be a gain, there could be a loss, right? So when there is a gain, what is the accounting treatment? When there is a loss, what is the accounting treatment? The accounting treatment is exactly same, what we have discussed and learned in the PP's time, right? I hope this Excel file is there. I hope you are able to see the Excel file. Yeah. So let me put revaluation gains and losses accounting entries again so that you will be able to learn, you will be able to revise as well. Revaluation impact. So now we are going to discuss this revaluation impact, which is your accounting treatment of gains and losses on revaluation. Right? This is what we are going to discuss. And in this case, let's take an example. Okay? Example of a mining right license. So let's take an example of a mining right license. Example, following details are given for a mining right license. Acquisition date is 1st April 18. Fair value is 31st March 19. Fair value is 31st March 20, and fair value is 31st March 21. What is my acquisition date? It is 1st April 18. And there are two cases, case 1 and case 2. Case 2 we will discuss later on. Let's focus on the case 1. Intangible asset, this mining right was acquired for rupees 10,000, right? At the end of year 1, fair value becomes 12,000. At the end of year 2, the fair value is again increased and it becomes 15,000. And at the end of year 3, right? So 19, 20, 21, it becomes 9,000. The fair value is decreased. Advise the treatment of the given information if the company has opted for the revaluation model. Now first discuss about the case 1. And you need to tell me the accounting entries quickly. You need to tell me the accounting entries quickly. So case 1, and you need to tell me what is the value of the intangible asset, what is the value of the revaluation surplus, if any. So first of all, the accounting entry on 1st April 2018. What is the accounting entry on 1st April 2018? Tell me. Intangible asset account debit to bank account, as simple as that. आप क्या करोगे? Intangible asset account debit to bank account. You will purchase the intangible asset. Simple entry. Intangible asset account debit, bank account. And what is the value at which this intangible asset was purchased? 10,000 is the value. Intangible asset account debit to bank account. Any doubt? Any doubt on this accounting entry? Yeah, I'm ignoring amortization and depreciation. I'm ignoring that. So what happens on 31st March 19? What happens? Now after 1 year, value of the intangible asset have been increased. What happens now? It got increased. What we will do now? Simple. Intangible asset account debit to revaluation surplus, right? How much amount? There is an increase in the value, no? So how much increase in the value is there? This 10 become 12. 2000 is the evaluation surplus, evaluation reserve. What is my value of intangible asset? My value of intangible asset will be 10 plus 2, which is there. What is my value of the revaluation surplus? It's 2000 only. What is the accounting entry on 31st March 20? Tell me. Again, the value is increasing. Intangible asset revaluation surplus, as simple as that. But how much? With how much amount this intangible asset is going to be debited? 15,000 minus 12,000, right? 3,000 revaluation surplus you need to recognize. What is my value of revaluation surplus at the end of the second year? 2,000 plus 3,000, 5,000. What happens on 31st March 21 now? This value has reduced significantly. This 15,000 become 9,000. Now what happens? Of course, you need to credit intangible asset to intangible asset. You need to credit. It is very clear that how much credit you need to give. You need to credit by 6,000 because your opening value is 15,000 and your closing carrying value is 9,000. So you have to credit by 6,000. It is very much clear. But what you will debit? What you will debit? It is very much clear that whatever revaluation surplus you have, you will debit to that extent. Right? So revaluation surplus debit, which is your 5,000. But intangible asset has been credited by 6,000. Where 1,000 will go? Where 1,000 will go? It will go to the P&L account. It will go to the P&L account. Impairment loss, P&L. It will go to your P&L. Where this revaluation surplus will go? This revaluation surplus will go to OCI, right? This will be debited to P&L. Any doubt? Any challenge here? Now, what is my value of intangible asset? My value of intangible asset is 15 minus 6. What is my value of revaluation surplus? Nothing. 5 minus 5 is 0. So friends, if the company is opting for a revaluation model, and whenever there is an increase in the value, the company has to debit the asset, which is simple entry, and the company has to credit revaluation surplus or revaluation reserve, which will be there in the OCI, other comprehensive income, right? Revaluation surplus, revaluation surplus will go to OCI, other comprehensive income, right? So now you have understood. So for example, if the company has an increase in value of the asset, so revaluation surplus needs to be created, reserve needs to be created in the OCI. Subsequently, if there is a decrease, right, to the extent of revaluation surplus available, that decrease is offset by that revaluation surplus. If the decrease is more than the revaluation surplus which you have booked, like in this case, the decrease is 6,000, the entire value of the revaluation reserve is 5,000. So the excess decrease will go to your impairment loss in P&L. The excess decrease will go to the impairment loss in P&L, right? Is that clear? Now discuss the case number 2, where in the initial year the value is decreasing, then the value is increasing. So we will cover both the part. Now let's discuss the case. Let's discuss the case 2. Right. Now what is the accounting entry on the day 1? Accounting entry will be same accounting entry. Intangible asset account debit to bank account. Intangible asset account debit to bank account. Okay. What is my next accounting entry? What is my next accounting entry? On 31st March 2019, what is my next accounting entry? The next accounting entry is value is decreasing. The value is decreasing. So it is decreasing from 10 to 9. Will you create a revaluation surplus? There is no surplus, there is a deficit. What is the accounting entry? The value has decreased by 1000. What is the accounting entry? Very good, Munish. Is impairment loss, which will be debited to P&L. Impairment loss, which is debited to P&L. So impairment loss P&L account debit to intangible asset, right? Impairment loss P&L account debit to intangible asset. This is your, I'll take the entry from the last entry. Impairment loss P&L debit to intangible asset. And what will be the value for impairment loss? It will be debited to the P&L. The value will be how much? 10,000 was the opening value. Closing become 9,000. 1,000. So it will be credited by 1,000. So 10 minus, right? Do you have the any revaluation surplus? Answer is no, there is no revaluation surplus. There is an impairment. There is an impairment. There is no revaluation surplus. There is an impairment, right? There is an impairment. Is there any impairment loss in P&L? Yes. This is the P&L. This is your OCI item. This is your P&L item. Okay? In the P&L, do you have any losses? Yes, 1,000. What is the next entry? What is the next accounting entry? 31st March 2020. What is the next accounting entry? Again this 9 become 8. Again 1,000 rupee have been decreased. What is the accounting entry? Impairment loss account debit. P&L to intangible asset. With what value? 9,000 minus 8,000, 1,000. This 1,000 asset has been credited and P&L has been debited. Right? What is my value of the intangible asset? It is 8,000. What is my value of revaluation surplus? It is 0. What is my value, total value which I have debited in my P&L? In the last year and in this year, the total debit now comes out at 2,000. Now, next year, 31st March 2021. In 31st March 2021, what happens? The fair value has increased from 8,000 to 12,000. 4,000 से fair value बढ़ गई. अब क्या करें? बढ़ गई तो asset should be debited. So intangible asset should be debited. Intangible asset debit. How much? Very much clear. Sir, my value has become 12,000, right? So I need to debit my asset. 12,000 minus opening value is 8,000. So I need to debit my asset by 4,000. That is very much clear. Sir, do I need to create a revaluation surplus? Standard says that answer is no. First of all, standard says that if there was a decrease in the initial years and then there is an increase. So first of all, whatever decrease you have taken in the P&L, take that increase in the P&L first. 2. Impairment gain or reversal of impairment loss. Impairment gain, P&L. It will go to P&L. How much? With the value whatever you have taken in the P&L so far. Sir, still, I have only 2,000 which I have debited in P&L. Still, I have 2,000 more. Then with that value, you will debit your revaluation surplus to revaluation surplus OCI. OCI, right? How much? 4 minus 2 minus 2. Sir, what is the value of intangible asset now? 8 plus 4. What is the value of revaluation surplus? It is 2,000 closing balance. Sir, what is the valuation? What is the accumulated value of P&L item? Nothing. 2,000 minus 2,000. Now you have already reversed the impairment. This is how this entire working needs to happen. Friends, please let me know if you have any doubt in this entire working. With the help of these two case studies, I have explained how this accounting treatment will happen, right? For revaluation gains and losses. I hope you guys are clear on this accounting part. This is not a new concept. This is what I am just making you guys, I am just doing a revision with you guys. Okay? This is exactly a replica of what we have understood, what we have discussed in our earlier standard on PE, right? And this is a good opportunity to do a revision. I hope it is clear. Is that clear? Okay. So again, I'm moving back to my PowerPoint presentation. And friends, so we discussed that in case of revaluation gains and losses, if there is an increase, that will go to the revaluation reserve OCI. If there is a further increase, again it will go to the revaluation reserve OCI. But if there is an increase, then there is a decrease. So of course, you need to adjust your whatever decrease is there, you need to adjust first from your revaluation reserve. If the decrease is excess, then you have to take it to the P&L. If initially there is a decrease in value, then it has to go to the impairment loss in the P&L. If further again there is a decrease in like a case 2, again it will go to P&L as an impairment loss. And subsequently, if initially it was decreased, then subsequently increase, again same funda. You have to first, whatever increase is there, first of all, adjust that increase with the earlier decrease, means take the credit in the P&L. If your increase is much more than the earlier decrease, then the remaining will go to the revaluation reserve in the OCI. Sir, if you have the revaluation surplus, what you will do? Again, your revaluation surplus can be utilized in two manner. One, when your intangible asset will be derecognized, it will be sold. In that case, whatever revaluation reserve was there, it will go to the retained earnings. Accounting entry will be retained earning needs to be credited and your revaluation reserve OCI needs to be debited, right? So it's a balance sheet to balance sheet entry. When the asset is derecognized, when you are derecognizing your asset, right? So whatever in revaluation surplus is there on that asset, it will be credited to the retained earnings. Okay. So transfer from revaluation surplus is always to the retained earning. It will not be a P&L entry. It will be a balance sheet to balance sheet entry where the reserve will be debited and the retained earning needs to be credited. Sir, if there is a revaluation surplus and we want to utilize this revaluation surplus during the lifetime of the asset, in that case, standard says that, for example, there was a 1 lakh rupees of cost, life was 4 years, and amortization was 25,000. But when there was a revaluation, after revaluation, the the cost has become 1,10,000 and the amortization has become 55,000. So what is the difference between the revised amortization and the earlier amortization? It is 25,000 earlier. Now it is 55,000. So the revised, the difference is 30,000. The difference is 30,000. So in this case, this 30,000. So the difference which is there between your earlier depreciation, earlier amortization versus new depreciation, new amortization, to the equivalent of the difference, you can pass an accounting entry, revaluation surplus or revaluation reserve account debit to retained earning every year by 30,000, right? Understood? So you will debit your P&L by 55,000, but this 30,000, which is 55 minus 25, your excess amortization to the extent of that value, you can transfer, you can release from revaluation surplus and you can take it to the retained earnings, right? So just you can refer the Excel file which I have given you in the PP standard, right? Or let me also put here. So just wait for a moment. So let me give you the concept here as well, so that you will not be just flipping between this file and that file. So let me just give you the concept here as well. Utilization of revaluation surplus, same. So let me, Utilization revaluation surplus. At the time of disposal or derecognition of asset, the balance of revaluation surplus will transfer to retained earning, accounting entry, revaluation surplus to retained earning. During life of the asset, revaluation surplus can be utilized every year to the extent of extra. Instead of depreciation, I'll write extra amortization. Life of the asset is 10 year, cost is 1 lakh, revalued amount is 1,40,000. So depreciation on the basis, instead of depreciation, I simply write this as a amortization. Amortization on the basis of original cost. Amortization on the basis of revalued amount. The basis of revalued amount. What is your extra? What is your extra amortization in this case? Understand this calculation? So on 1 lakh, if the life is 10 year, 10,000 is the depreciation. On 140, the amortization is 14,000. So extra amortization is 4,000. So to that extent, although you will debit your P&L by 14,000 every year, but to that extent, you will pass an accounting entry every year, revaluation surplus account debit to retained earnings. So this is how this utilization of revaluation surplus will happen. Right? This is how you will do the utilization of revaluation surplus entry. Guys, is that clear? So friends, it's 8:21 now. Let's have a 5 minutes break. And after that, so we have completed the concept of this revaluation, surplus revaluation, impairment loss, revaluation model, right? So now we'll discuss the amortization concept, useful life and amortization concept. So that is an important concept. Okay, we'll discuss that after this take of 5 minutes. It's 8:22, so we'll start at 8:27. Okay. So friends, we have covered after initial recognition, we have covered initial measurement, where we spoke about these 6, 7 situations like business combination, government grant, separate acquisition, internally generated intangible asset, exchange of asset, deferred payment credit. So we spoke about those things. Then we talk about the subsequent measurement at the reporting date, which is cost model or revaluation model, right? And we have also discussed the treatment of the revaluation gains and losses. Then we discussed that where the utilization of revaluation surplus will happen, how this revaluation reserve will be utilized. And we discussed that revaluation reserve will be utilized by two ways. Once the asset is derecognized, the second when the asset is used during the lifetime. So we discussed about that concept. Do let me know if you have any doubt so far with respect of whatever concept we have covered till now. If you have a good command on the concept, believe me, you will be able to solve any question in the examination. You will be able to solve any question in the exam. Of course, you have to do the practice from ICAI study material, right? Yes. So friends, now we are talking about the useful life, which is contractual or other legal right. So we understand that useful life in case of a fixed asset, in case of a tangible asset, the concept is pretty much clear. But how this useful life will be determined in case of a let's say intangible asset. So useful life of intangible asset generally arises from contractual or other legal rights, right? It Let's say the government has given you a license and the period of license is 15 years. Okay. So in that case, the useful life will not exceeding the contractual or other legal right, because you got the contractual right or you got the legal right only for the 15 years, right? So government has given you license for 15 years. For example, there is a telecom company and the telecom company has entered into Indian jurisdiction and they got the license from the Department of Telecom for 15 years. And now they took around 2 years for building their infrastructure. For creating their infrastructure, they will take 2 years time. Okay. They will take 2 years time for creating the infrastructure. Now, once the infrastructure will be created, then only they will be able to utilize the benefits of this infrastructure, of this license, right? Of this license. So license is an intangible asset. Answer is yes. The life is 15-year. Answer is yes. But this license, from this license, they will be able to get the future economic benefit only for the 13 years. For example, they will be able to get the future economic benefit only for 13 years. So in that case, the license has to be amortized over a period of 13 years. Right? Or I can say that if the company has taken a license and the company expects that in the last 3 years, in the last 4 years, in the last 5 years, I will not be able to utilize the benefit. Although government has given you a license for 15 years, but the company expects that the company will be able to use only for the next 10 years. Probably in the next 10 years, the technology will evolve, new technology will come, and this technology will outdate. So standard says that, first of all, your useful life should be dependent on your legal or contractual rights. Number two, it shall not exceed from your legal or contractual right. Rather, it may be shorter than your legal or contractual right. If you expect that you will be able to use the asset only for the lesser period, in that case, your future economic benefit will be received only for the lesser period. In that case, your useful life could be lesser than your contractual life. Okay. So let's discuss this with the help of an example again. This is an important concept, useful life of an intangible asset. Right? So friends, in case of a useful life of an intangible asset, we discussed that useful life is driven by contractual or legal right. It shall not exceed the contractual or legal period. The life may be shorter than such contractual or legal period. Example, Government of India has given a mining right to X Limited for a period of 10 years. X Limited is expecting future economic benefit for a period of 5 years only and expecting to use this right for 5 years. What is the useful life in this case? In this case, the contractual life is 10 years, but the useful life is 5 years, right? This is the concept of useful life of intangible asset. Is that clear, friends? The Government of India has given a mining right to X Limited for a period of 10 years, but X Limited is expecting future economic benefit only for a period of 5 years and expecting to use this right for 5 years. What is the useful life in this case? The contractual life is 10 years and the useful life is 5 years. Right? Is that clear? The concept of useful life is clear to all of you? Friends, now there is a new concept in case of a useful life. In our Indian GAAP accounting standard 26, you remember it was a concept of useful life. So in Ind AS and IFRS, the useful life could be a finite life or the useful life could be indefinite life. The useful life could be a finite life or the useful life could be indefinite life. Right? In your IFRS and Ind AS, useful life could be finite life, could be indefinite life. But in accounting standard, useful life was never indefinite life. It was never indefinite life. Sir, what is meant by finite life and what is meant by indefinite life? First of all, I'll give you an example. Then you will be able to understand. The company has purchased a company. The company has acquired another company. Sun Pharma has acquired Ranbaxy, right? When Sun Pharma has acquired Ranbaxy, so there is a goodwill, okay, attached to it because Sun Pharma has paid a premium and of course they have recognized the goodwill. Now what happened? This is a purchased goodwill and it has to be capitalized in the books of accounts. It is not an internally generated goodwill, right? It is not an internally generated goodwill. It is a purchased goodwill. It has to be capitalized in the books of accounts. Now what happened? The company expects that the company will be able to receive the future economic benefit only for the period of next 8 years. Only for the period of next 8 years. 8 years, the company will be able to receive the future economic benefit due to this acquisition, right? So what is the amortization period for this goodwill? This goodwill has to be amortized in which life, in which period? What is the life of this goodwill? 8 years. So this is known as a finite life. This is known as a finite life, right? Now I am giving you the second example. Finite means fixed. Fixed means, finite means certain, not fixed, certain. Okay. Now I am giving you another example. Let's say the company has acquired another company and due to acquisition, the company has capitalized a goodwill because the company has paid a premium and the company expects the future economic benefit from that goodwill, but the company is not certain for how many years. So the company expects that yes, this goodwill will bring synergies, will bring efficiency. There will be a benefit to the company for a long period. But how much period is a long period? That is not identifiable. That is not determinable. That is not certain. It could be 10 years, it could be 15 years, it could be 20 years, it could be 30 years. So company is not able to ascertain that, right? And for sure, it will be a long period of time. So in that case, standard says that it is a case of indefinite life, where life is not certain, where life is not determinable. It is a case of indefinite life. In our accounting standard, what happened? In our accounting standard, AS says that if the life is indefinite, you are not able to ascertain the life, take the life as 10 years. So there was a rebuttable presumption in accounting standard 26, which says that life should be not more than 10 years if the life is not determinable, right? So in that case, due to this assumption, the life cannot be indefinite in case of accounting standard. I hope it is clear to everyone. right? But in Ind AS, the life can be indefinite. Sir, if the life is finite, we understand, we can compute depreciation. But if the life is indefinite, then how can we compute that depreciation? I mean to say amortization. In that case, standard says that you are not required to compute amortization. Why? Because there is no denominator is not there. What is amortization? What is depreciation? That is equal to depreciable amount, right? Which is your value of the asset divided by life. So in indefinite life is not there. So standard says that in case of indefinite life, you are not required to compute amortization or depreciation. You need to assess the asset for impairment. You need to assess impairment on an annual basis. So friends, in case of a finite life of asset is determined, amortization will be required, right? In case of a finite life of asset is determined and amortization will be required. For example, cost of license is 10 lakh, life is 10 years. What is your amortization value? What is your amortization value? Your amortization value will be amortization is equal to how much? It is equal to 1 lakh. Amortization is equal to 1 lakh, right? Is that clear? In case of indefinite life, right? What happens in case of indefinite life? Number one, why indefinite life is there? Entity does not foresee that future economic benefit will be available for how many years. That is the number one problem. Entity does not able to foresee. That's the first problem. As I told you, they are not certain that for how many years they will get the future economic benefit. They are not certain. Okay. What could be the number two? Amortization is not possible in this case. Like in this case, amortization was required. In this case, amortization is not possible because you don't know the life. Why amortization is not possible? Because you don't know the life, don't have the denominator. Sir, okay, amortization is not possible, we understand. Then mandatory impairment testing is required at least once in a year. Mandatory impairment testing. You have to assess a recoverable amount of that asset for the mandatory impairment testing. Number four, entity will review every year if the life is determinable. So entity, sir, at the time of inception, let's say if they have concluded we are not aware about the life, the life is not determinable. So are we good in saying कि life हमेशा indefinite होगी? Answer is no. At every reporting date, the entity has to determine, has this become determinable now? Are we able to identify the useful life now? For example, after 2 years, the entity is able to demonstrate that yes, now we are very much clear that we will not be able to receive the future economic benefit. We will not be able to receive the future economic benefit after a period of 2 years, after a period of 5 years, for example. In that case, after 2 years, this indefinite life become a finite life. जैसे ही एंटिटी डेमोन्स्ट्रेट कर पाएगी कि हाँ, अब मुझे पता है कि मैं अगले 5 साल में इसका बेनिफिट रिसीव करूंगा. In that case, the entity will say that now my life become a finite life. Sir, what happens in that case? Whatever value is there, that value has to be supposed to be charged for supposed to be charged for amortization. So let me tell you, let me just give you an example here so that you will be able to understand that how this transaction needs to be happening, how this transaction will be moving. So let me give an example of indefinite. Example of indefinite life. Okay. A Limited acquired a business and capitalized a goodwill. I hope the Excel is visible to everyone, friends. I hope it is visible to everyone. Friends, are you understanding whatever I'm explaining? I'm not getting a response from you guys. Are you able to hear me? I just need to understand, is it clear to everyone? Is it clear in mind or is clear out of mind? What is that? Clear in mind or clear out of mind? Clear in mind. Very good. A Limited acquired a business and capitalized a goodwill of rupees 1 lakh. Okay? At this juncture, at this juncture, the company is not able to determine a life of the asset in which it will receive the future economic benefits. At this juncture, the company is not able to determine the life of the asset in which it will receive the future economic benefits. Right? So, at the end of year 2, the company was able to identify that remaining life is 5 years. So let's say at the end of year 2, a recoverable value is rupees 70,000. Is rupees 70,000. At the end of year 3, the company was able to, and at the end of year 2, the company was able to identify the remaining life is 5 years, right? At the end of year 2. So first of all, what is your cost of goodwill? What is your cost of goodwill? Goodwill. Cost of goodwill is 1 lakh. What is your amortization in first year? What is your amortization in first year? Please tell me quickly. Very simple question. Amortization in first year. What is the amortization in the first year? 0. Why 0? Because amortization is not possible. Is not possible as the life is not here. It's not determinable. Right? So what is my carrying value at the end of, and I have also assessed for recoverable value, but recoverable value is not given in the year 1. So I am assuming the recoverable value is same. I am assuming the same recoverable value, right? I am assuming the same recoverable value. Carrying value end of year 1. Less amortization in second year. Again, amortization in second year is possible. At the end of the second year, they realize that the further life is 5 years. At the end of the second year, they realize the remaining life is 5 years. Right? At the end of second year, they have realized. After second year, right? They have realized. So again, they will do the impairment testing. And of course, the second year, amortization is not there. But they have to charge the impairment, less impairment. Impairment. What is the impairment? Impairment is 30,000. Why? Because the recoverable value is 70,000. It means your impairment is 30,000. Okay. Carrying value at the end of year. Carrying value at the end of year is 70,000. Okay. Now what happens? In the year 3? In the year 3, what happens? Less amortization in the year 3. So now, in the opening of the year 3, at the beginning of the year 3, it was clear that the remaining life is 5 years now. Amortization in third year. In this case, In this case, you need to depreciate, you need to amortize this 70,000 over a period of 5 years, right? Now, your depreciation, your amortization is 14,000. It is your 14,000. Your carrying value at the end of year 3 is how much? Is how much? It is 56,000. This is how this entire thing will happen. Why it is 14,000? So now the life is determined. Hence, now the life is determined. Hence, the amortization, hence the amount, hence the asset needs to be amortized. Okay. So friends, this is the concept of indefinite life when indefinite life is converted into a definite life. Indefinite life is converted into definite life, right? Or instead of at the end of year 2, I can also say that in the beginning of year 3. In the beginning of year 3. The life will not change, right? Mufita is asking, sir, why, sir, for remaining period not taken? Mufita, in which case you are talking about? Mufita, in the question it is given that when this goodwill was capitalized, so life was not determinable. There was an indefinite life, and that is why at the end of year 1, I was not aware about the life. Okay, at the end of year 1, I was not aware about the life, right? And at the end of year 2, I was not aware of the life, or at the end of year 2, I was aware that the remaining life is 5 years now, right? So that is why I have only assessed the impairment. Okay, because when the life is indefinite, you need to assess the impairment. At the end of year 2, now you are certain that now remaining life is 5 years. कि अब 5 साल में होगा. So now from that year, from third year, company has charged the amortization. Mufita is saying, why is 70,000 divided by 3 not taken? Mufita, in the beginning of year 3 or at the end of year 2, the remaining life was decided for 5 years. Remaining life. I'm not saying the total life. Remaining life, I'm saying. Is it clear now or not clear? Is it clear or not clear? The useful life of an intangible asset, we discussed that. In case of a useful life, it could be a finite life, it could be indefinite life. If the finite life is there, means limited period of benefit to the entity. Amortization is required. If life is indefinite, means no foreseeable limit to which the period over which the asset is expected to generate cash flow. Amortization not required. And of course, impairment testing is required every year. Mandatory impairment testing. Amortization. What is meant by amortization? It is just I would say a brother of or a cousin of depreciation. It is just a mirror image of depreciation. What is meant by depreciation? What is meant by amortization? So again, as I told you, depreciation is the systematic allocation of depreciable value of an asset, right? What is a depreciable amount? Depreciable amount is equal to cost minus residual value, right? So like in case of normally in case of an intangible asset, there is no concept of residual value normally, right? But even if still in the question it is given that residual value is there, right? You will be able to sell this intangible asset, or after 15 years, the government will give you, let's say, 1 lakh rupees when you surrender this license to the government. So it means whatever amount I have spent, for example, 20 lakh, in 20 lakh I have acquired a license, and government will give me 1 lakh when I'll surrender that license. So I have to amortize at 20 minus 1, 19 lakh I need to amortize, not 20 lakh I need to amortize. Same concept. Cost minus residual value. Divide by period. Divide by life. Okay. What is the meaning of amortization? The meaning is allocation of the depreciable amount of an intangible asset with a finite useful life on a systematic basis over its useful life. Simple, right? The life of the license is 15 years. The cost is, let's say, 30 lakh. So 30 lakh divided by 15, 2 lakh is the value of the amortization every year. When you will start amortizing the intangible asset, when it is a put to use or when it is available for use? When it is put to use or when it is available for use? When it is available for use. Same concept was there in PPE as well. When it is available for use, not as a put to use, when it is available for use. When you will stop charging amortization on the intangible asset? When either the asset is classified as held for sale, same like PPE, or when asset is derecognized. If that license has actually been surrendered, so it has been derecognized, right? There is no question of, charging amortization on that license because that has already been derecognized. The software has already been derecognized. So there is no concept of charging that. Okay. Clear? Is that clear? Amortization, depreciation, is that clear? So meaning allocation of the depreciable amount of an intangible asset with a finite useful life, okay, over the systematic useful life, over the systematic basis. Is that clear, friends? Clear, not clear, or clear? Now, what could be the various method of amortization? What could be the various method of amortization? What could be the various method of amortization? Tell me what could be the various method of amortization. Now tell me what are the various method of depreciation. Straight line method, WDV written down value method, unit of digit or production method. What is meant by straight line method? And why these different methods will be used? So how as a management or how as an auditor, you will allow that, okay, if you are using that method, we are happy. Friends, first of all, this method is not only a theoretical answer. These methods are dependent upon that how this asset is going to be used. When I'm saying that how the asset is going to be used, asset का use कैसे होगा? Asset का use कैसे होगा मतलब उस asset से benefit कैसे आएंगे? If the future economic benefit is consistent, then what is the right method? The right method is straight line method. Means the consumption pattern is constant. कि इस एसेट का कंजम्पशन पैटर्न कांस्टेंट है, राइट? कंजम्पशन पैटर्न ही कांस्टेंट है इस एसेट का. So it means that depreciation and amortization should also be consistent and constant, which is straight line method. Second, when future economic benefit is having a decreasing trend, means in the initial years you will have more benefits, in the later years you will have a less benefits. In that case, WDV method is the most appropriate method because your consumption pattern is decreasing, right? Third, when future economic benefit is on the basis of usage, means your future economic, whenever you will use the asset, you will get the future economic benefit. Whenever you will not use the asset, you will not get the future economic benefit. So if it is actually on the basis of usage, then consumption pattern is also on the basis of the usage, right? So in that case, which method is right? Unit of digit or production method. Like in case of aviation industry, aircraft, if their aircraft are not flying, in those cases, the maintenance of those aircraft, the depreciation of those aircraft, the maintenance is also not coming into the picture. So generally, like if I talk about the projector, bulb, so their life is into the lamp hours. Aircraft life may be on the basis of flying hours, right? So it is dependent on the lamp hours, it is dependent on the flying hours, okay? So in that case, unit of digit or production method is more appropriate. Okay? Change in amortization method is considered as a change in accounting estimate and has to be applied prospectively. Right, friends? So friends, let me share my Excel file, and please do let me know if my Excel file is visible. This is my amortization method, right? So when future economic benefit is consistent, consumption pattern is also constant. straight line method is required to be used. And future economic benefit is having a decreasing trend, consumption pattern is also decreasing, WDV method is the right method. And future economic benefit is on the basis of usage, consumption pattern is also on the basis of usage, unit of digit production method is the right method. Change in amortization method is again a change in accounting estimate, and it has to be applied prospectively, right? Okay, friends, do you have any question here? Do you have any question here? So we discussed this part, amortization method we discussed that this method reflects, these method reflects the consumption pattern, right? These method reflects the consumption pattern. If pattern cannot be determined reliably, then straight line method shall be used. Amortization charge for each period shall be debited to the profit and loss account. If this intangible asset is used in the production of some other assets, in that case, this amortization will be capitalized as a part of the cost of that asset. Okay. Like I told you in PP, amortization period, the life of the asset, and the amortization method has to be reviewed at least at each financial year end. At the end of every financial year, you need to review these methods. If the expected useful life of the asset is different from the previous estimate, then amortization period shall be changed accordingly. For example, initially you estimated 10 years. After 2 years, you estimated only 5 years. That remaining life is only 5 years. Then whatever carrying value is there, that has to be amortized prospectively over the remaining useful life. Such changes will be considered as a change in estimate. So this method change, life change, this impact is prospective, not retrospective, prospective. All right. Let's discuss this illustration number 10. X Limited engaged in the business of manufacturing fertilizers, entered into a technical collaboration agreement with a foreign company Y Limited. As a result, Y Limited would provide the technical know-how enabling X Limited to manufacture fertilizer in a more efficient way. So this Y Limited is sharing a technique, right? And with this technique, this X Limited will be able to do this production in a more efficient way. And X Limited will be able to save the cost of the production. X Limited paid rupees 10 crore, right? 100 lakhs, rupees 10 crore for the use of this technique, which is known as know-how. This is a technical name, know-how, for a period of 5 years. So, of course, when Y Limited is sharing a technique, sharing a formula, of course, Y Limited will charge something. And X Limited will also pay. Why X Limited will pay? Because X Limited has some benefit. And which kind of future economic benefit is there? The future economic benefit is savings in cost savings. So X Limited estimate the production of fertilizer as follows. Right, the life is 5 years. In the first year, 50,000 metric ton production is there. In the second year, 70,000. Third year, 1 lakh, 120, 1 lakh 10,000. At the end of the first year, it achieved its targeted production. At the end of the first year, the targeted production achieved. At the end of second year, 65,000 metric tons of fertilizer was being manufactured. So they have estimated 70,000, but the actual production was 65,000, right? And X Limited decided to revise the estimate for the next 3 years. And in the next 3 years, the revised figure is 85, 1 lakh 5 and 1 lakh 15. Instead of these three figures got revised, right? For year 3, 4 and 5 respectively. How will X Limited amortize the technical know-how fees as per Ind AS 38? First of all, the life is 5 years, right? And I need to ask you guys, which method is more appropriate in this case? Is it straight line method, WDV method, or unit of production method? Which method is more appropriate? You need to tell me. And you need to tell me with the reason, right? With the reason. So for getting the reason, first of all, you need to understand this question. What is the intent of X Limited for paying for this technique? Why X Limited is buying the technique? Please tell me. X Limited is buying the technique so that X Limited will be manufacture this product in a more efficient way. So what is the meaning of more efficient way? What is the benefit? What is the benefit X will get by producing in a more efficient way? X will get a cost savings. X will get a cost savings. How this cost savings will be arrived? The cost savings will be arrived by manufacturing this product. So when you will manufacture more, you will have a more cost savings. When you manufacture less, you will have a less cost savings, right? अगर आपने 10,000 यूनिट्स का आउटपुट बनाया एंड लेट्स से द कॉस्ट सेविंग्स पर यूनिट इज ₹5, so your savings will be 50,000 rupees. If you will produce 20,000 units, your cost saving will be 1 lakh rupees. Understood? So somehow you have paid 10 crore rupees. How will you get the benefit out of this 10 crore rupees? By doing more and more production, right? So that you will be able to recover this 10 crore rupees. So the intent of X Limited is not years. The intent of X Limited is to do more and more production so that the cost of 10 crore which X Limited has paid, X Limited will be able to recover by savings in cost, by cost savings for more than at least this amount, right? Otherwise तो कोई फायदा ही नहीं हुआ ना. So in this case, whether straight line method is appropriate, answer is no. Why? Probably in the first year only 50,000 units are there. In the second year 70, third year 1 lakh. So it is not straight away. It is not consistent. It is not constant. So straight line method is not appropriate. Whether WDV method is appropriate, again answer is no. Because this manufacturing, this output, this future economic benefit is volatile. Whether unit of production method is appropriate, answer is yes. Why? Because the benefits is relating to the units produced. So unit of digit method or production method is more appropriate in this case, right? Friends, I am taking you guys on the Excel file and let's solve this particular problem. Let's solve this case study. I hope you guys have understood the case study. Let's discuss this. And everyone is given the right answer. Everyone is saying, sir, need to apply unit of production method. Illustration number 10 of ICAI study material. In this question, unit of production method of amortization will be the most appropriate method. We all have agreed so far. We all have agreed that this will be the most appropriate method in this case. Right? Okay. So friends, let me put these things here. First of all, there are years. How many years are there? 1, 2, 3, 4, 5. 5 years are there. Right? What is the initial estimate? Initially 50,000 metric ton production in the first year. In the second year, 70,000. In the third year, 1 lakh, 120 and 110. 1 lakh, 1 lakh 20,000. Sorry, 1 lakh, 1 lakh 20,000 and 1 lakh 10,000. So this is the production. Right? Yes. So what is the actual production? In the first year, the actual production was 50,000. Okay. In the second year, the actual production was 65,000. Okay. And then the revised estimate at the end of year 2. So in the first year, nothing was changed. In the first year, of course, the actual production is 50,000 and you will carry the same estimates. But at the end of year 2, the estimate was revised. And of course, 1 year has gone, second year has gone. And now the estimated have revised to 85,000, 1 lakh 5,000 and 1 lakh 15,000. 85,000, 1 lakh 5,000 and 1 lakh 15,000. So as per initial estimate, total production was 4,50,000. As per revised estimate, the total production is 4,20,000. The revised estimate at the end of year 2 and for next year 2 for current and the next 3 years. Okay. So what is my revised estimate for at the end of year 2 for current and the next 3 years? The revised estimate is how much? 65,000. And of course, these are the revised estimate. Now, friend, what is my amortization? You tell me what is my amortization. First of all, what is my cost of intangible asset in this case? What is my cost? Cost of intangible asset is how much? 10 crore. 10, 1, 2, 1, 2, 3, 4, 5. This is the 10 crore. Tell me how I'll calculate the amortization at the end of year 1. At the end of year 1, your total cost is 10 crore multiply by how many units have been actually produced? 50,000 divide by what is the total estimate? The total estimate is 4,50,000, right? The total estimate is 4,50,000. So this will be your amortization at the end of first year. What is your amortization at the end of the second year? What is your amortization at the end of the second year? What is your amortization? Tell me. End of second year. So I need to compute for computing amortization. After amortization, I need to compute the carrying value as well. Carrying value at the end of first year. What is my carrying value at the end of first year? Right? 88, 888, 889. This is my carrying value at the end of the first year. Now, how to compute the amortization for second year? How much units I have produced? How much units I have produced so far? How much units I have produced so far? Tell me. How much unit? So already 1 year has gone. Leave that. Now, how much units I have produced in the second year? 65,000. So this is my carrying value 88, 888, 889 multiply by how much units I've actually produced? 65,000 divide by what is my total? What is my total production? What is my total revised production? Right. So 3,70,000 for the next 4 years, including the current year. Is that clear? Is that clear or not clear, guys? Is that clear? Not clear. So now my carrying value at the end of the second year is 7327327. Okay. I hope it is clear to all of you. I hope it is clear to all of you. Is that clear to all of you? Is it clear or not clear, friends? I'm just asking. What is my amortization in the third year? What is my amortization in the third year? So since in the third year, now at the end of the second year, all the estimates have been fixed. Okay. And there is no any information given in the question regarding the change in the future estimate. So in this case, you have two options. Option number one, for this carrying value. So there are two options. Option number one, you will use the opening carrying value, multiply by current period estimate, divide by what? Divide by the remaining, divide by the total remaining, which is total remaining 3,05,000. Or you can do one thing simple. You can use this value 88,888,889 multiply by a current year estimate, current year production, divide by the total. It comes out at this value. This will be your closing value. Same. Use the same value because nothing is changed now. Into this, divide by total estimate. Right? Again, 88,888,889 multiply by this, divide by. So now your closing value will become 0. Sir, why you are using the carrying value at the end of the first year in all these cases? Because friends, In all these cases, I have used the carrying value at the end of the first year. Why? Because after first year, in the year two, after first year, in the year two, right? The estimates, whatever estimate was taken, it was freezed. There was no any change as per the question. If in the question if the change was there, in that case, I'll do the same treatment like I've done in the second year. And I'll do the treatment for the third year and onwards, right? So this is how this carrying value has to be determined. Let me know if you have any problem, if you have any challenge in this particular case study, let me know. Do you have any challenge in this case study, in this illustration? Yeah. Any challenge? Guys, do let me know. No any problem? Very good. This intangible asset become an easy standard when it is covered after PPE, because as I told you, the 60-70% fundamental is same, whatever we have learned in the PPE standard. Okay. I hope my PPT is visible. In case of indefinite useful life, we have already covered that it is mandatory impairment testing, and you need to review at the end of each period whether the indefinite life becomes a definite life or not. The last part, which is retirement and disposal, friends, standard says that. So again, we have covered the birth of the intangible asset, which is initial recognition, initial measurement, subsequent measurement. Then we talked about cost model, revaluation model, amortization, impairment. Now let's talk about the end of the life, death of the intangible asset, retirement and disposal. Standard says that the intangible asset shall be derecognized on disposal when actually the company is disposing the asset, or when no future economic benefit are expected from its use or disposal. When no future economic benefit is expected from its use or disposal. Right? Number one, intangible assets shall be derecognized on disposal. Number two, when future economic benefit is not expected from the use or disposal. Right? You have the intangible asset. Number one, you don't have the intangible asset. Means you have actually sold out. You have actually surrendered. Right? So of course, if you have sold out, you have to credit the asset. If the asset will be sold out, it is not there in the company's custody, it has to be derecognized. Or the asset is there, but future economic benefit has been wiped out. There is no future economic benefit. Again, you need to do the impairment. You need to just derecognize that intangible asset. Sir, if we are selling that intangible asset and we are getting a gain or loss, whether that gain or loss will go to the P&L, answer is yes. Sir, whether it will go to the P&L in revenue, answer is no. It will be classified as other income. It will not be classified as revenue. It will be classified as other income or other cost. Right? So this is your favorite slide. Thank you, slide, friends. So we have covered entire intangible asset in detail, right? In detail in the last two sessions. And again, I want to summarize that today we have started with the revision of the class 1, and then we have discussed in case of a subsequent measurement, there are two models, cost model or revaluation model. So whatever model the company will apply, the company has to apply consistently for a particular class of asset, right? For example, if the company is applying a revaluation model and there are 5 assets in the one class, okay? So for 4 assets, the company is able to determine the market value, the fair value, but for one asset, the company is not able to determine the fair value. In that case, it is allowed that that 5th asset will be there at cost model. It is allowed, right? But if the fair value is determinable for every asset in the same class, in that case, if the company is opting for a revaluation model, every asset in that class has to be revalued. Cost model means where you need to consider that cost and you need to depreciate and check the impairment every year, and you need to compute the carrying value. In case of a revaluation, you need to do the revaluation at the end of every year. If the values are volatile, significantly volatile, if values are not volatile, then it is okay if you will just do the revaluation in a frequency of 3 to 5 years. Whenever you will do the revaluation, either there is a revaluation gain or there is a revaluation loss. If first time there is a revaluation gain, it will go to other comprehensive income. Revaluation surplus will go to other comprehensive income. If there is a revaluation loss, it will go to your impairment if it is for the first time, right, in the P&L. But if first time there was a surplus, then there is a loss. Of course, you need to adjust this loss from the surplus available. If loss is more, in that case, the difference has to go to the P&L. Vice versa, first time there is a loss, then there is a surplus. So you need to adjust your surplus, okay, with the loss which has you have booked earlier. Means you have to reverse the loss. But even if the surplus is higher, then it has to be taken to the revaluation surplus OCI. सर व्हाट इज द ट्रीटमेंट, व्हाट इज द यूटिलाइजेशन ऑफ द रिवैल्यूएशन सरप्लस? हम कहां यूटिलाइज करेंगे? अगर आपने एसेट बेच दिया है, खत्म कर दिया है, देन दैट रिवैल्यूएशन सरप्लस विल ट्रांसफर टू द रिटेन अर्निंग. सर अगर एसेट नहीं बेचा तब भी रिवैल्यूएशन सरप्लस है, तो क्या करेंगे? सो वॉट एवर your revised depreciation, revised amortization is there just due to that revaluation surplus. In that case, to that extent, the difference between the existing depreciation or amortization versus the revised depreciation or amortization, to the extent of that difference, you have to credit your retained earning, debit your revaluation surplus, right, every year. Then we have discussed the concept of useful life. The concept of useful life in case of intangible asset, it is not more than the contractual life, but it can be less than the contractual life basis the expected usage of the asset. The useful life could be a finite life, could be an indefinite life. If the useful life is a finite life, then you have to amortize that intangible asset over the life. If useful life is indefinite life, there is no presumption of the life. Useful life is indefinite life, then you need to check the impairment testing every year. You need to check the recoverable amount every year, right? If and you need to you cannot charge amortization on that, you cannot charge depreciation on that, and at the end of every reporting date every year you need to review whether my life becomes certain or it is still uncertain, it is still indefinite, right? Once the life becomes finite, you have to charge the amortization prospectively accordingly, right? So then we discussed the finite and indefinite life. Then we discussed there are three methods of the amortization: straight line method, WDV method, unit of production method. And we discussed the concept of those three methods. At the end of every year, you need to review your depreciation or amortization methods, as well as you need to review the useful life. And again, this change in method, change in life is all prospective. It is not retrospective, right? Then we discussed the concept of retirement and disposal, where your asset is derecognized, your asset is disposed, you need to derecognize that. And if there is any gains and losses, it will go to P&L as other income and other expenses. This is what we have understood in intangible asset standard. Your homework is do all the practical examples of institute case study, institute study material. Do all the practical examples from ICAI study material. Friends, do let me know if you have any question. If you don't have the question, then I will conclude this session. Munish is asking, sir, production estimates are revised after year 2. So it has not been revised after year 2 because it is not given in the question. What happens if it will be revised after 2, let's say in the year 3? So in the year 3, we will take the actual as per the year 3. And for year 4 and 5, we will take according to the revised numbers, I hope you guys have enjoyed the session. You guys have understood the session. Thank you so much, friends. Thank you so much. And I have concluded my session with the entire revision. Thank you so much, guys. Bye-bye. Take care. I can conclude my session now.